In the ever-changing landscape of employee benefits, rising healthcare costs are putting businesses to the test. How can companies balance the scales between comprehensive health insurance and financial sustainability? Welcome to the Policybazaar for Business show partnered by ET Now. I'm Kavita Thapliyal, and today we are unpacking the complex dynamics of employee health insurance with experts who are navigating this critical challenge, exploring strategies that protect both corporate budgets and workforce well-being. Joining me in this conversation, I have with me Priya Deshmukh, Head Health Products Operations and Services, ICICI Lombard, Piyush Raghuvanshi, CHRO, Apna Jobs, Sajja Praveen Chowdary, Director and Head Policybazaar for Business. Sajja, Piyush and Priya, thank you so much for joining us today. And so before we get into the cost aspect and the uptake of group health insurance from a business point of view, let's understand the landscape and how are we actually enrolling these employee benefits in post-COVID era now.
See, I think post-COVID, as we discussed in earlier episodes as well, I think the definition of employee benefits has extended beyond what it used to be earlier. Primarily from being only insurance to kind of moving towards a wellness kind of a thing, where you speak about anytime care that is available to employees, or the employees are looking at kind of giving that, which might mean a doctor being available on call at any point of time, or some employees even going to the extent of saying their OPD coverage is also being covered, which means you go and visit a doctor, even that being covered. I think we've seen that kind of changes happen because a lot of people have seen in COVID what no one ever predicted kind of. That's one of the primary things that changed. And even people perspective, a general average person's perspective towards health has also changed. That is also to an extent what has led, I think, the way employees are looking at this as well clearly, because the perception, what they're getting from the employees. Having said that, from a cost perspective, I think during COVID, we've clearly seen the rise in the hospitalization costs to a huge extent. One, because of shortage of, whether it's in terms of, staff or the number of cases versus the number of people being able to care. That was for a short duration. But having said that, somewhere, one is that there were some surgeries which got postponed during that period, during 2020 and 2021. Obviously, the elders who would have got a cataract done or a knee replacement done or some kind of surgeries, that elective surgeries that you call as, they've postponed. And I think that slowly moved into 2022 or spilled over into 2022, where we saw the cost being on the higher side. But then what we're seeing in the last, even the 2 years post that, whether to 2023 or 2024 also, is that somewhere the medical inflation has kind of clearly been on the top, I would say. Probably anywhere depending on the year that you might see, it would average about roughly 10 to 15% kind of, I would say. That's one thing which has changed the average cost of a treatment, and automatically, I think what we would call as, whether it's an employee health cost or whether it's a regular healthcare cost,
even individual,
it's clearly seen.
It's clearly
seen to be on the higher side. So definitely costs have increased over the last 3-4 years, I would say, post-COVID, whether it's in terms of either due to the impact of what has happened. The second thing that we're seeing is that as we move forward, there are also a lot of, the robotic treatment and modern treatments which are coming into picture, right, these days. I think it's been there slowly for a while, laparoscopic surgeries and few other things.
Okay.
But these days, more and more modern treatments are evolving. When these kind of things are increasing, or when these kind of treatment options are becoming more and more available, I think there are a lot of people who are also looking towards it when the coverage is available in their policies.
Exactly.
That also leads to a bit of escalation in costs. And that's what we're seeing as few contributors, I would say, in the last 3-4 years in terms of increasing costs on the employee healthcare side.
Mm-hmm. But employers definitely can't get away with all of this, right? So how are you dealing with it?
I think, like Sajja mentioned, right, post-COVID, a lot have changed, right? So, as an employee, their awareness level or their vulnerabilities about dealing with medical emergencies, it gave a lot of learning for us that, how we need to make sure that we are more prepared about it, right? We were just talking about, me and Priya, that, still the coverage is just 35-40% in India, and most of it is employer sponsored.
Employers, yeah.
So what we consider now as a strategic investment in this is no more a good to have, a nice to have benefit offering. It is a very integral part of our offering, for our employees. It also adds up to for our talent attraction and retention strategy.
Yeah.
Because with a lot of growth and startups and Indian economy
That's
booming
right.
up,
Yeah.
you also need to be very, very competitive in terms of your being an employer of choice. So it also became a part of our value prop of giving best-in-class employee assistance program, preventive healthcare programs.
So that's like a demand also coming up from the talent side that you see?
Absolutely, because now the candidates or talent in the market or employees, they give 70-80% of their weightage in benefit offering to group health insurances.
Okay.
So it is going to be very key, and which is why I said now we started to consider this in spite of a dent on the P&L. Or a cost, we still consider this as a strategic investment and will continue to remain invested in that.
Priya, definitely a very huge market for you as a player, right? But it definitely has to be affordable from an employer's and organization point of view also. See, the relevance is definitely there, and this market is just going to develop more, okay? Looking at the kind of trends and the demands that people have, employees have, you have an employer who's stating some 70 to 80% weightage given is to the kind of benefits, employee benefits they are offering. He also mentioned something called as being tailor-made products. So are you already looking at it, because inflation is really pinching everyone?
Absolutely, and very interesting conversation. And as mentioned, you look at health and wellness bit of it, or maybe the cost of inflation, upwards of 14%, and employees remaining very, very focused on what is the kind of, benefits that are being chosen.
Mm-hmm.
It's extremely important to really tailor the requirements depending on the population that you're going to serve. And we are continuously, focusing on this particular area, where depending on the size of the, company, what is the age group, what is the kind of claims that are expected, you could tailor and create a flex benefit kind of an option.
For example, I mean, you can just compare a startup with a well-established
Absolutely.
organization.
I mean, a startup requirement and the age, group would be very different from an established company with an average age of, say, 35 to 40 years, as against a startup having 25 years, as a median age. So depending on that, if the inpatient care utilization is not expected to be very high, we could have options of wellness. So for example, we have
a startup might just want all of those things
fit
added.
care, or pharmacy, or nutrition for that matter, and other fitness kind of elements. So we try and create a holistic approach, and more you use the primary and secondary care, the burden on the tertiary care is lower.
Okay.
And that's how the cost is just a direct derivative of the fact of how many people are falling sick, how many of those are going either in daycare or inpatient hospitalization, and what is the cost of treatment. And depending on the mix of the ailments, whether it is infectious or cancer or critical illness, and Sajja spoke about deferred elective surgeries, it would all pan out basis all of these combination of factors. So to again reiterate the fact that depending on the size of the employer, depending on how much is a feature-rich benefit from an affordability perspective, and how can we really tailor it, because one size fit all is not going to really
is
work.
not possible, right? Any sector-specific requirements that you might want to focus on or sit with the organization and discuss it out in offering this?
See, especially when we're discussing about costs, right? I think one thing that we clearly see today is that there are certain segments which are, for example, say the manufacturing sector, versus say a startup kind of segment, right? Now in a manufacturing sector kind of a thing, what we've seen is that they have certain, generally that we've seen is that there are certain limitations that have been put into place in terms of cappings that are there in the policy kind of. As a result of which, what happens is, one is the cost is a bit contained, because when you have certain cappings in place, whether it's in terms of say a room rent capping or a copay kind of a thing, or say a capping on certain ailment costs kind of thing like cataract and knee replacement surgery, there's certain cappings that are put in such known packages kind of, right? In these kind of things, what happens is the employee also ends up seeing the bill, or kind of questioning of the hospital if something is happening left, right, here and there kind of, or looking at the cost and then accordingly deciding a hospital where do they want to get in, because something is going to go out of their pocket as well, right? So there's something which you've seen in a segment like manufacturing, where generally there are certain cappings that are put into place kind of, and that to an extent contains the kind of cost movement upwards kind of,
right.
Because someone is bearing some part of it, and as a result they would be more careful about what kind of hospital are you getting into, or how much are you going to pay out of your pocket. In a policy also where there are no cappings and nothing being looked at, they're bound to happen. There are things that are bound to happen, and automatically the costs are bound to rise, right?
Right.
So if there is no capping on a room rent or the type of room that you can avail, then tomorrow there's no really something that's being stopping you from when you are in need of, when you have hospitalization that's required. Now, in case of a normal hospitalization, what you require is a hospital where you would want to go and kind of have, say, probably a single private room kind of a thing, and kind of ensure that the right set of treatment comes across.
Yeah.
Versus some people looking at it like more of kind of, can this also be a luxurious kind of a thing to an extent, right? Now in some places that boundaries start to kind of blur, and then that also leads to a kind of increment in cost. The second part is, which is not sector specific, but I think it's more of agnostic of sector, but where you've been able to drive, whether you've been able to drive cashless or not in a particular policy. Now, for example, this is one of the things that we've done through, I would say, use of technology better, rather than, while cashless has been there forever and is known that, in the case of cashless, you need not pay out of your pocket and so on and so on. But the other thing which is commonly slightly unknown, or, probably people would know, but it's there on the back of the mind, not actively, is that when you go to a cashless kind of a network, the insurance company or the TPA has already kind of tied up with a particular set of hospitals and accordingly pre-negotiated certain packages. In such a case, the same cost what you would have kind of paid 1 lakh rupees and then would have filed reimbursement to the insurance company would have probably come at about 60,000 rupees. Now it's a win-win for everyone, right? Why I'm saying win-win for everyone? You spend 60,000 rupees, which means the liability cost or whatever the claim cost in the entire what the employer bears, and hence because next year pricing is going to be based on the claims this year, it's going to be 60,000 versus 1 lakh rupees. At the same time, for you as an employee, if you let's say have 3 lakh rupees as sum insured limit for a year, in one go you exhausted 1 lakh and you only have 2 lakhs to go, versus you exhausted 60,000 say, versus you have 2.4 lakhs to go. Now what we've done is, apart from the regular ensuring that the portals which are there for cashless being there, we made it much easier kind of being able to have it even on, say, the network list or whatever being available even on a WhatsApp bot kind of thing. When you want to check it, it's there, the fingertips kind of thing. Or in terms of ensuring that there are time to time communication that goes out every month to employees in terms of saying, please check for cashless hospitals list in case of a need of hospital. So these are the kind of things that one is from sector specific, which we've seen in terms of how or how the policies are designed, rather than saying sector specific, but somehow it is clearly there in some of the sectors that the costs differ. And the second thing is whether you're able to use certain things like these, where initiatives like these which would ensure that more and more cashless happens, and as a result some part of your claims come down as part of it kind of.
Talking about claims, what's the kind of claim that we are talking about right now, if recent trend in your organization, if you just want to know?
There's a small fun fact is always the high claims comes from a very small percentage of employees, right? And that actually influence the entire claim ratio and the usage, the spend, etc., utilization, etc., right? So I think recently what we have seen is, and I'm talking about last couple of years working with the next gen young organization, is the claims are coming more from the parental side of it. So if I have to look at it, almost 60% is from the parental coverage, because family inclusivity has happened, and this is one of the key parts that we wanted to offer. And then 20-30% is from the spouse and kid side of it, and then last was the employee as an individual itself, the 10% of it, right? So that's the kind of, and we are leveraging a lot in terms of the utilization, the data and technology in platform to understand that really well, so that we start to understand, we start to evolve our learning to create the customized or tailor-made solution for the next year, every time when we have to negotiate, or every time we have to, in fact, improvise our offering. So that's on the claim side of it. The second thing that is also is a learning in last couple of years post-COVID era is very lifestyle related diseases kind of treatments, right? Thanks to all the long working hours, etc., and I'll not get into those recent topics, but I think because of the sedentary lifestyle, a lot of claims are started to come. We also learned that a lot of the parental claims have increased because they would have migrated from their base to living in the urban cities with the working new couples or the kids, etc., and that also creates a disconnect from their active lifestyle back at their home versus the new place, and that adds to more different kind of illness, diseases, etc., and that adds to the, right? So these are some of the very interesting things that we started to evaluate, from our employees' perspective, and see how we can strategically look at some of those things, for the coming years.
So how do you come into the picture and help them deal with these challenges and frame a strategy for the next year?
So look, typically a group policy would entail a 12 months period. And as an insurance company and risk underwriter, we are looking at the propensity and probability of somebody claiming,
right,
depending on age cohort, any pre-existing disease, and all the other factors. Keeping that in mind, there are certain curves or certain expected, kind of incidences and costs that we are anticipating. On a regular basis, we engage with the, client and even the brokers, through conversations to understand the population health analytics, as we call it, as to what type of claims are emerging. Are these claims from past year? Are there delayed patterns of claim? Are there more parental claims, involving cataract or maybe hip replacement, joint replacement? Those are the kind of cohorts of claims that we observe. Talking about spouse, in many of the corporate policies, you would have maternity as one of the, biggest line item as a claim utilization pattern. Okay. And then you would have a combination of other critical illness and lifestyle diseases. So we engage proactively basis the past data from previous year. Okay. There are certain conversations on putting certain measures that Sajja also mentioned on cost containment standpoint. Those levers are, co-payment, sub-limits, engaging into, chronic disease management programs. Certain corporates are very keen in intervening in the care continuum of the employee, not at the time of hospitalization, because by that time you've already missed the bus. How could you avoid cardiac events? How could you avoid, issues with sedentary lifestyle, other cholesterol, diabetes issues? So we engage and tailor those programs, and wherever, there's cost involved in delivering these programs. So the whole overall picture and end-to-end, kind of visualization of how the whole program will work is something that is aligned at the beginning of the program. Okay. On an ongoing basis, once in a quarter, once in a month, we have pre-defined mechanism in which we engage with the corporate to understand what did we anticipate together and where is this particular policy or the population health dynamics pointing out as a evolution or manifestation of actually the claims loss ratio, so to say. Sure. And depending on that, in certain cases, if there is an abuse that is observed, if there is any kind of patterns that we are observing, corrective actions. Those could be educational, orientational, like cashless use, network for better, quality as well as outcomes, and also cost becomes one of the important, prerogative. Those are the measures that we continuously drive in consultation with the, intermediary as well as the corporate. And of course, if there are areas that can be avoided, how can we avoid? In many cases, there are instances where a particular surgery is actually not warranted. Now, we can't intervene in the care continuum when a physician or a surgeon is advising. But what are the second medical opinion options? What are the alternatives? Those are areas that we really engage and keep invested in.
Mm-hmm. So, Sajja, coming to the innovation part of it, because this is going to be the crucial aspect as far as I understand the future of group health insurance now, because it's going to be a competition even among corporates who gives the best coverage to their employees, right? How can innovation really play a key role in getting the cost down for the employers?
See, as I said, right, I think in some of the policies that we're seeing now, where the costs seem to be rising clearly, I would probably categorize into 2 or 3 categories, I would say. There are companies who have kind of clearly, once the cost, they've seen that the costs have been increasing, and they clearly said that they would want to kind of create some cost containment measures, which either in terms of room rent capping or say a co-pay right. Or kind of having ailment wise capping kind of thing. Then the second segment, which is clear that they would not want to very kind of do any kind of cost containment measure. They're ready to kind of take that cost and kind of go all out and kind of give that coverage to employees. Then the third segment, which is kind of evolving, I think some of the place where some part of this innovation or changes, I would say rather, or a tweaking that is there, which was there earlier slightly, but very few corporates used to opt for this. Okay. But now there are more and more corporates who are opting for it. Is in terms of saying, I would contain the regular policy to an extent, in terms of saying there'll be some kind of cappings in certain, whether it's room rent or whether it's in terms of ailment wise capping or a co-pay. But for those who would have been taking the voluntary policy, because the voluntary policies have been running for a while now, like a top-up policy or the parental voluntary policy, and so on and so forth. For those who have been taking that voluntary policy, they make it part of that to get this additional coverage. So let's say someone who has a, say 8,000 room rent capping kind of thing, and someone who wants to go beyond that 8,000 room rent, or for example, someone who has everyone who has say, generally 10 or 20% copay kind of a thing against the ailment, and someone says, no, I don't want the 10 or 20% copay to be deducted at the time of hospitalization. It is mandated that then you go ahead and you take a voluntary top policy as well. Rather than, just saying that everything has to be on the company kind of, right? So that's a balancing act that some of the companies that we're seeing are more and more taking. I think that's also to do with, kind of awareness that's coming up, because earlier there were very, very few corporates who used to kind of have these kind of policies in place. That's one of thing that's clearly there, which is coming up. The second thing I think we already discussed about, kind of ensuring that is there a way that we can push more and more cashless possible, where, network hospitals and packages lead to claims costs coming down. That's a regular thing. But in terms of, ensuring that the communication flows seamlessly and there is a clear cut availability, I would say, rather than, or at the same time, also the other thing is, there should be this entire process of earlier when an employee joins, that employee data which goes back to insurance companies for, enrolling into the insurance policy happens once in a month or once in 45 days. That's how the tenure is earlier. Where the employee, for example, someone who would join from say 1st December till 31st December, the data used to get collated and would have been sent to insurer, with taking spouse details, kids details, everything and all of that, probably around 15th of Jan. And then post 15th of Jan, the insurance company would have, kind of given the okay by about say within the next 2-3 days. And by 20th or 20th of Jan is when you would have got your e-cards. Now, what if a claim comes in between? Either it's a manual coordination, and for those where the manual coordination did not occur, then they had to go into reimbursement. Can we ensure that this also happens seamless so that even these claims go into cashless, and hence some part of, whatever is feasible to kind of increase the cashless, but can that be done? So that's where technologies come into picture, where we said, why should it be done manually? Why can't it be done through integration, where we've integrated HRM systems kind of, and then automatically the data comes on a daily basis, and then there are regular enrollments that happen automatically, and quicker e-cards moving back into the inbox of employees, which means it's there at their fingertips, which means it is a chance that everyone can go for cashless also. Even these employees can go for cashless. These are kind of things which we are ensuring to
more tech-enabled services. So far, so good. It's a developing story. A lot can be done, but then my time is up on the show today. Thank you so much for all of you being on the show, and even for our viewers, it's time up on the show. Thank you so much for watching. Goodbye.